A very good morning to all our viewers and welcome to Opening Bell here, live broadcast from Moneycontrol. I'm Stacy Pereira and I'm here to take you through all those news and cues that could go on to impact your trading day and how you can in fact learn from our experts and take their advice and see how that can really change your trade for the day. Well, before we get to the headlines, we do have a Nifty and even a Nifty Bank expiry today, tomorrow being a holiday due to Eid, and which is why you're going to see a bit of volume action in trade today. So that aside, we also have the handover that we've got, which seems quite a bit of modest gains. So seems like the GIFT Nifty really indicating that we could see further momentum from here on. But before we get into all those details, let me give you a quick recap of all the top headlines. Now, indices did close flat on Wall Street ahead of that key CPI inflation data for the month of March as investors await some certainty over Fed's rate cut trajectory. And stocks in the Asia Pacific have opened quite on a mixed range. The GIFT Nifty, however, is suggesting a higher start for the Indian equity markets. And the crude rally has paused after oil prices have fallen for the second day, with Brent crude now below that $90 a barrel. Precious metals, though, have continued their rally. Gold has extended its record run, while silver prices have hit their highest level since June of 2021. And if you're talking about EVs, then Tesla's entry into India will be one of natural progression, is at least what Elon Musk is saying for the electric car company. Now, the statement comes amidst reports of a Tesla team arriving in India to scout for locations to set up a manufacturing plant this month. And among stocks that you need to keep out on your radar in focus will be those such as Paytm. After FPIs have increased stake in the company in the last quarter, we'll have Lupin, which is in focus, PB Fintech, as it has incorporated a wholly owned subsidiary in PB Pay, as well as Vedanta after it gets a positive coverage note from brokerages. Well, those were the top headlines, and we have quite a bit to look forward to. Just about 12 minutes before markets could open, and we can actually see whether we are headed towards those 23,000 levels, or we'll see some bit of resistance perhaps, or next to those 22,800 levels, and that is something that we are going to be watching out for, those key chart levels that we need to be tracking. But let me also give you a quick roundup of all the F&O cues that we are talking about. Now, if you look at the put call ratio, we did see a drop in that one, coming in at about 1.09 from the previous 1.29 levels that it saw in the last session. We also did see a strong put writing that was observed in the 22,500 strike, which will act at that strong support zone for the index. However, unless there are more call writers that exit from that 22,800 strike, further up move in the index seems a little unlikely. So those are the levels that we are seeing, 22,500 to 22,800 at least for the Nifty, and even in the F&O segment, those are the put and call strikes that we are seeing get more traction. Now, if you look at the ban, now NSE has gone on to add Excise Industries, Indusind Copper, as well as Vodafone India and India Cements into the F&O ban list for April 10th. They are also retaining Bandhan Bank, SAIL and Zee India, which have been there for the past 3 odd sessions as well. All of those will continue to be in the F&O ban list for April 10th. Now, if you look at the trade setup and the fund flows that we've been seeing in, now FPIs, though, even though they have overall net been quite, we've been seeing good inflows into at least March and April. Yesterday, they were the net sellers selling shares close to about 593.20 odd crores, whereas it was all the heavy lifting done by the domestic institutional investors, which went on to buy 2,257.18 crore rupees. This according to the provisional data that NSE puts out. Well, so let's look at what we're staring at right now. We do have those higher highs when it comes to all of our benchmarks. They all managed to touch new record fresh highs, most of them, at least the Sensex Nifty. But we did see profit taking, at least in the last hour of trades. The Sensex managing, it did surpass that 75,000 summit, we could say, but then didn't get any momentum from there, couldn't hold on to those gains, and then we saw some bit of profit taking. Even for the Bank Nifty, for that matter, that one has extended that journey for 5 consecutive sessions. Yesterday it saw about 150 odd points that it gained newer highs that it was crossing, but there is of course profit taking that is happening, at least in those last hours of trade, where we are seeing, and those perhaps could be the time where we are seeing investors, buy on those dips. And if that is a strategy that is being used into, then we can look forward to something like that. We do have a couple of stocks that are going to be in focus now. One of them, of course, is going to be Paytm, like I mentioned in, I beg your pardon, in the start of the show, where 197 Communications, in fact, they have seen a lot of interest. Now, this is coming in from the foreign portfolio investors who have gone on to increase their stake by almost close to 2% in the Q4 of FY24 in Paytm. No matter all the drubbing that it saw after the regulatory overhaul, we are still seeing a lot of interest in them, especially from foreign portfolio investors and also mutual funds, because mutual funds have gone on to raise its stake in Paytm by about 1.16%, which was earlier just about 4.99%. Now that has increased to about 6.15%. There's other news also to do with Paytm, wherein Surinder Chawla, who was their MD and CEO of Paytm Payments Bank, has also gone on to resign. So let's talk about Paytm, because yesterday there was a Bank of America coverage also on the stock, which has happened now. So a lot of traction that it's getting from different corners. Let me get in Rajesh Palviya. He's joining us now on the show. Good morning, Rajesh, and good to have you with us this morning. I was just talking about Paytm and how, we've been seeing different kind of news flows, but of late, there is a coverage that has started being initiated by different brokerages on this counter. Do you think it is still a dicey bet, or what would be your call on Paytm?
Good morning, Stacy. So, so I think my call would be to avoid at this moment. A lot of news flow is taking place in this counter, and still in this recovery stock not managed to give breakout of its major supply zone, which is placed at around 430, 440 zone. So until the stock not crosses above 440 level, I think problem is likely to be there in the stock prices, and possibly if it breaks below 385, then possible downtrend may extend, and possible downside we can see towards 350, 340 kind of level also. So overall structure is bearish across all time frame. Our advice would be to avoid at this moment. We will look at this stock only above 440 level. Then only we may see some stability in the prices till stock trading below to 440. There would be supply pressure is likely to be there.
Rajesh is saying look for 440 levels if you have to look at Paytm, and right now it's trading somewhere around 400 odd. So we'll have to still keep that cautionary note when it comes to Paytm. In fact, their UPI market share too has dropped after all of that regulatory overhaul that came in. It's the lowest in 4 years, and the transaction value market share is also down by to 6.7%, and this being multi-year lows for this particular counter. So Paytm might not, even though brokerages have initiated coverage now, might still be on the sidelines or a fence sitter for now on this particular stock. But Rajesh, what about the Bank Nifty? Now that one has been acting quite smartly. It has seen some good gains and coming in from all quarters. Of course, 2-3 sessions ago, it was HDFC that was really pushing up that index. But the Bank Nifty, yesterday we saw, after hitting those record highs, fresh record highs, yesterday was quite flat. So what really is going to change that for Bank Nifty, and are we seeing those 50,000 levels that everyone is talking about? Is that likely to come anytime soon?
Yeah, definitely. So Bank Nifty is clearly showing outperformance. Yes, we have hit all-time high for Bank Nifty. Long built-up was there in derivative data. Also, Bank Nifty manages to cross above its call concentration area of 48,500. So these all positive development in terms of technical as well as on the derivative front also. And the the constituent of Bank Nifty like ICICI Bank and other private bank like HDFC Bank, PSU banks are also, contributing to this rally. So I think, yes, outperformance we could see in the Bank Nifty, and yes, possible 50,000 target we can see in the Bank Nifty in the continuation of this up move. Very strong buying action is taking place. Put writers have shifted their base at higher side. So I think till Bank Nifty is holding above 48,300, we are optimistic and we believe that, yes, possible target in the continuation of this trend could be 49,500 to 50,000. We could see in the coming weeks also. So those who have already bought Bank Nifty can hold their position, keep trailing stop loss at higher level. Now your stop loss should be placed at around 48,400.
Talking about banking stocks, Rajesh, do wait on, because let me give some news updates that have come in. Now, this last evening, we did see Indusind's parent company, that is IIHL, it has gone on to sign a definitive agreement with Invesco India's asset management company, and this they will be forming a joint venture. Now, in this, IIHL will acquire about 60% or shareholding in Invesco India's asset management company, and Invesco will go on to retain about 40% stake in this newly formed JV. Remember, both IIHL as well as Invesco will go on to have that sponsor status, and we were the first ones to tell you back on April 2nd that there were reports that the Hinduja Group in IIHL was in advanced talks to acquire close to 60% stake in Invesco mutual funds, and that has now come about, and we are seeing this, a new JV in this space. Rajesh, your word on this? We're seeing a lot of action, in fact, in this whole AMC brokerage space as well. Now that, there's a formal bank going on to acquire something like Invesco. Overall, if you have to look at this space with AMCs and brokerages, what would be your call, and if you have any picks in that space?
Yeah, so the direct impact which we are seeing on the AMC, as we are seeing, good traction in terms of, AUM on the AMC, and the market participants have already, we are seeing very growth trajectory for market participant in the equity market. So we believe that, HDFC AMC is looking very promising at this moment. I think that stock one should look for, short-term investment perspective, as overall structure for HDFC AMC is looking promising. And the way stock is holding the ground, we believe that the immediate target we can see towards 3,800 to 3,850 for HDFC AMC. So one can look to buy this stock, and possible upside we can see in very short period of time. Keep your stop loss now at around 3640 to hold your long position. Even from this AMC space, Nippon and Asset Management, NAM India is also looking very promising. The way stock has recovered in last 2-3 weeks, now stock is approaching to its multiple supply zone, which is at around 535, 540 zone. Once this breakout happens, then possible upside target for NAM India we could see towards 600 kind of level. So strong buying action is taking place. Stock is in uptrend. If we analyze the monthly, weekly chart, the stock moving in up sloping channel, so that clearly shows that there is a sustained buying action is taking place. So NAM India is also looking promising. Keep your stop loss at around 500 to buy this stock also.
Right. So HDFC, Securities, NAM India, some of those recommendations within the brokerage and AMC space, at least what Rajesh is putting out there. But let's also talk about a couple of other brokerage notes that have come out. One from CLSA on Vedanta, and it's quite interesting because we're seeing the metal index as a whole do quite a bit, have quite a bit of traction of late, and perhaps on its own, and not really any news trigger that is really building onto those. But if you look at what CLSA has said on Vedanta, it has upgraded it to buy from reduce, and it has hiked the target price as well to about 390 from the earlier 360 that it was. They say that they're well placed to benefit from this commodity upcycle that we are witnessing, and the efforts to raise capacity as well as profitability across segment augurs quite well for Vedanta. The leverage trajectory as well as corporate structure will also be something key to watch out for. So that is a CLSA's note on Vedanta, and it's interesting to see how that stock also reacts to this kind of positive coverage that it has got. But there on your screens, we are at opening bell, and we are Nifty comfortably poised about 22,700 odd levels. So 0.2% of gain for the Nifty. And that's, I would say, consistent in at least the past 3 sessions that we've seen, where Nifty opens up by about those 0.3% or close to 50 odd points in an up move, and that perhaps getting sustained through the week, through the day at least, for the Nifty. Sensex too, there about 200 odd points that it is looking to gain at opening bell, but that too about 0.2% of gain. Not anywhere close to that 75,000 levels that we were hoping, or what we saw in yesterday's opening session. But yeah, it is trying to manage to keep that support at 74,800 odd levels. The Bank Nifty too seeing a pretty much flat start, we would say, for the Bank Nifty, and what it did in yesterday's session as well. After those record high levels, it is still managing. It is hitting new highs, but still rather flat, we would say, at this point for the Bank Nifty. The mid cap and small cap too managing to hold on to those gains, at least supporting, we would say, even the benchmarks at this point, almost close to 0.5% of gain for the mid cap, whereas a small cap also seeing close to 155 odd points on opening itself. So both the broader indices also holding out and supporting the mid caps. But let's also look at the sectoral indices. Well, Nifty IT, then they're also lending support, we could say, and so was the case in the previous few sessions, where we saw the Nifty IT pack move in the positive zone, although it will get a bit iffy when we come close to the earnings season kicking off on Friday. Pharma is an interesting pack as well, and we'll be talking about that in detail, because there is some news coming in from different counters like Lupin, Alchem Pharma and others, where they are seeing some bit of positive news. So that's why perhaps those adding to the gains for pharma. FMCG, interestingly, also in the positive today. Yesterday, I think that was the only counter that did see some bit of pressure, we would say, through the session, but now at least holding out to some bit of gain. So is the consumption pack, pretty much moving in tandem, both of those. And ahead of earnings season is where we are likely to see some bit of jitteriness when it comes to these stocks. The auto pack also comfortably about 0.5% of gains there for the Nifty auto index. Let's also look at who are or which are the stocks rather contributing to these gains. And if you look at them on your screens there, you have the gainers: Hindalco, Tata Steel, Bharti Airtel among the gainers. So you have a couple of those metal names once again in your top gainers list. Coal India, Reliance, as well as Asian Paints. There's Eicher Motors, Tata Consumer Products, as well as Wipro there. Quite interesting to see Wipro there, because yesterday it was among the losers. So there is that profit taking that it's seen after all of that news about its CEO. But now you're seeing it make it to the gainers list. Let's look at the flip side on your screen. Also are the losers there, and you have Divi's Lab, HDFC Bank, interestingly there, and Sun Pharma, TCS, Ultratech Cement, as well as Adani Ports, all of those in your losers list. And it's interesting to see even TCS ahead of its earnings, because tomorrow being a trading holiday, we are directly going to go on to Friday, which will have TCS kick off that Q4 earnings season and put out its numbers for Q4. And it doesn't seem very a positive note for the IT sector as a whole. After all the news flow that has come in, it seems a bit like Q4 is going to be a bit of caution again when it comes to the IT sector. But do post in your queries for us, and we'll try and have our experts answer them through the course of the show. But let me bring Rajesh back and get his view on the IT sector. We are close to hitting earnings season. What could we expect from the bigger IT names, or would you still suggest one could rather see a couple of interesting stocks within the mid-cap IT pack?
So, Stacy, it's still, participants are, waiting for the outcome by the earnings, because still looking at the near-term, short-term structure, is still most of the large-cap IT stocks are consolidating in range only. Be it TCS, Infosys, Wipro, HCL Tech, all stocks are, showing same kind of behavior. I think once we have a clarity from this earnings cycle for IT stocks, that would give us, clear direction from here onward. If we analyze the structure for TCS, though long-term structure for TCS is on the bullish side, but on the near-term structure, stock is consolidating in a range. In this range, if at all TCS manages to view breakout above 4,000, 4,020 kind of level, then possible upside we can see towards 4,200, 4,250, though structure is bullish. So at this moment, our advice would be to buy on dip should be your strategy for TCS. If you get any, a dip ahead of earning or, post earning. So 3,800, 3,760 are the important level on the downside for TCS. So again, one can enter if you get any opportunity in the decline. So TCS is on our buying list at this moment. Even for long term perspective, we are bullish and holding the view on the bullish side for TCS. If we go with the mid cap IT space, so I think one can look for Coforge. That stock is also consolidating since last couple of trading session. Though stock is holding the ground about 200-day moving average, and on the near term structure, some recovery is taking place, but still on the high side, 5,800, 5,840 is the immediate supply zone. If stock crosses those levels, then we could see a rally towards 6250. On the downside, one can keep a stop loss of around 5,600 to buy Coforge also. But if we analyze the overall structure, most of the stocks are still in the consolidation. I think once the result season, playing out, I think then there would be more clarity in terms of charts.
Right. So TCS one could adopt a buy on dip strategy and could have that for the long term. And among the mid cap, Rajesh is suggesting Coforge would be an interesting pick. But let me also talk about the pharma pack, because we're seeing quite a bit of action there. Among those, one will be in focus, of course, that of Lupin. Now, this because they have gone on to launch the first generic version of Oracia. This is the doxycycline capsule that they are going to be producing in the US, and they're looking at estimated sales of close to $128 million for this particular drug itself. This drug, Orcia, is used to treat inflammatory lesions of rosacea, that is a skin condition, and which is why Lupin is seeing those kind of gains there on your screen that counter close to 2% of gains post this news. But if you have to look at the pharma pack in general and how it has been reacting after all that we heard about the China dumping having, that fizzled out in terms of the exports that these pharma companies put out, that has been quite robust, and the realization from that has been quite positive. Then there are news like this where you're seeing many of these drugs get those US FDA approvals. In fact, let me bring on board now my other guest, which is Nikhil Oswal. He's the founder and director at Finterest Capital. Good morning, Nikhil, and nice to have you with us this morning. I was talking about how pharma companies have really had quite a bit of turnaround when we saw at one point, if you look at 2-3 years ago, where there was so much of regulatory overhaul for them, and there were these various US FDA observations that would come through, and not really much happening in terms of the earnings as well for pharma companies. But now that picture is quite different, and we are seeing, maybe would you want to call it a turnaround, or what would be your take when it comes to pharma companies?
Good morning, Stacy. Firstly, and amazing start to FY25. And of course, I think pharma is a sector to look at in FY25 altogether. Because one thing, if we go back in the history and understand that pharma altogether has consolidated almost for 8 years. In 2015, we made a high in pharma index, and that was broken just last year. So almost 8 years, the index itself has consolidated, and a lot of stocks had consolidated during that time. So I think pharma is definitely a sector to look at. And we are almost 20% above from the previous all-time high that we had made in 2015. So I think that itself indicates that it's a strong breakout, and we will see a lot of stocks going up. The turnaround seems to be definitely happening over here. So pharma is definitely a sector to look at, and there are some really good ideas, like you can say, I mean, Aurobindo Pharma, Lupin, Wockhardt, Marksans Pharma. They're going to be doing some really new innovative drugs are being launched. So I think it's a sector to look at, definitely.
Right. In fact, we'll take another query from this space itself, and Rajesh can give us his view. Abhijit is asking on Divi's Lab right now. It is, of course, seeing some bit of pressure in today's trading session, closed down about 1.5%. But Rajesh, what would be your take on Divi's Lab?
I think in the previous week, there was a strong buying action. In the current week, yes, there is some consolidation action is taking place as stock is approaching to its multiple supply zone, which is placed at around 3780, 3800 kind of zone. Looking at the recovery in last week, we expect that, once this breakout takes place around 3800, then Divi's Lab may show some short covering action and possible upside target we could see towards 3950 to 4000 kind of level. Stock has already formed a base which is higher compared to the previous swing low. So we expect that some positive momentum we could see in the near term basis. Those who have already bought the stock can hold the position with stop loss of 3680. And we believe that in going forward there could be a breakout above 3800 and then really can extend towards 4000 level also.
Right. Nikhil, what is your view on the whole metal pack? Because we are seeing most of them really contributing to the gains on the top gainers list, even in today's trading sessions, the like of Tata Steel and others. Vedanta coming in with that news where brokerages have initiated coverage now on that particular counter as well. So metal pack, what can we really expect? Even if not in terms of their Q4 earnings, as a whole, is it a good time to be looking at metals as a sector?
Surely, definitely, I think metal is a sector where we should definitely be, because see, there's a fundamental change happening over here altogether. Your raw material prices are at a very low right now, and the end product, the metal prices, the base metal prices are going shooting up northwards. So I think metal is something that is going to do well, and not only for a short term. I think it should do well for a period of time. And I mean, Vedanta definitely is looking good, because I mean, though the cycle is cyclical in nature, but if you see silver breaking out, I mean, silver has almost reached 83,000 in INR. So I think that is, the beneficiaries are Hindustan Zinc, Vedanta, and because they are one of the global leaders in silver production. And I mean, not only silver but other production which is happening in copper is also going to benefit Vedanta. So I think Vedanta is a good bet, of course. And if you see China opening up, the demand is also increasing. And in copper, what has happened is basically China's largest producer has taken a 10% cut in copper. So due to which that entire supply is going to get shifted to India. And these are the companies that we should look at for short term, definitely. And I mean, we like metal sector, definitely. It's going to do well.
Right. So quite interesting how the metals, the whole game is really playing out. Let me quickly also just try and answer a couple of queries that people are posting on our feed, and Rajesh can take this up. There is a query from Ankit Utkarsh, who's asking that he's bought in Suntech at about 498.17. He's asking what can we expect in the long term for this particular counter. Rajesh, what would you suggest on Suntech, and the fact that he's already bought it at 498? What should be his next strategy? Buy, sell, hold? What would you suggest?
So my advice would be to hold, as whole real estate space is doing good and most of the real estate stock have done well and even moved back to the all-time high trajectory also. Suntech is also showing recovery from its recent low. Stock has formed a base at around 400 level, and in the previous week also we have seen very strong rally. Some consolidation is taking place at this current juncture. I think as stock is now holding about to 20-50-day moving average, that is clearly showing that the near-term chart is also gaining the strength. If stocks continues to hold above 440 level, then possible rally can extend towards 480 to 500 kind of zone. As he has already bought it around 498, almost that is the second resistance level from the current level. So I think he should hold if he has a time horizon of another 2 to 3 months. I think possible upside we could see towards 540, 550 in the stock. Keep your stop loss now at around 435 to hold your long position.
Right. One more query that we'll try and get answered is from Debuke. He's asking view on Gravitas India. What would be your take on that counter?
So some corrective move is taking place in the stock, but overall structure for Gravita is on the bullish side only. Stock is now shying to cross its previous swing high. Once stock crosses above 1100, 1120 mark, then this rally can continue further, and possible upside target we could see towards 1250 to 1300 kind of zone also. So overall structure is bullish. If you have already bought the stock at lower price, can hold the position. If you wish to buy at current level, you can buy it in this decline also. Your stop loss should be placed at around 985. Till stock is holding above 985, view is likely to remain on the bullish side for near-term perspective also. And long-term trend is bullish. So we are bullish for the stock.
Right. Nikhil, over to you. How are you looking? If you look at the macros, we are quite comfortable there with all the inputs that we're getting in terms of, where inflation stands, where the GDP number is, all of that really working in our favor. But we do have the elections coming up, and that could, perhaps play a little bit of spoil sport or bring a bit of negativity, although we're not seeing markets perhaps already priced in what the election outcome is really going to be like. But there are external factors as well. We're seeing crude at $90 a barrel. What could be these other headwinds that we could face in the next 2-3 months as we get into this election mode, according to you?
See, apart from your inflation, crude prices, I don't see any other headwinds as such. In fact, all the data that we are seeing are definitely positive right now. You can see the GST data, you can see income tax data, you can see your RBI reserves, which are nearly all-time high. You see the monsoon, which is going to be positive. Commentary from that the monsoon is going to be better than normal this time. So all of these things, cumulated together is definitely positive for us. And at the same time, if you see, our banking system is resilient. SEBI is doing a great job by introducing T+0 settlements. So overall, these things will definitely attract FII investors coming to India. And for last 1.5 year, we have seen dollar being constant between this range of 83 to 84. So that also is very positive, because for FIs who are earning in dollar denomination, it is for there it's a stable mind that okay, there's a resilience in terms of currency management as well. So which is why I think I don't see any headwinds or anything negative. But of course, the crude is something that we should look at. Shouldn't surpass $100. Below 90 is definitely a positive stance for us. And elections, market is smart enough to know what elections are going to be. We know already. Think most of the things are being discounted because we see NDA coming in power. So overall the picture is very, very positive, and markets are discounting that. Of course, we are breaching everyday new highs.
Right. So if you go by market trajectory, most of it is already factored in, is pretty much what most experts in the street are also saying, and they've perhaps already penciled in. Rajesh, quickly to you, your top picks for our viewers for the trading sessions ahead. What would you be suggesting? What's on your radar?
So I think first stock, Metropolis is looking promising. The way stock is breaking out its resistance zone, and the kind of long built up was there in previous session. Follow buying action is taking place. So Metropolis, one can look to buy. Possible target we could see towards 1830, 1840. Keep your stop loss at around 1765. The second stock that we like is MCX. Very strong buying action since last couple of trading sessions. Stock managed to give breakout of its previous swing high. Looking at the long built up, we expect M6 can extend its rally towards 3950, 4000 kind of level. Keep your stop loss at around 3720 to buy M6 also. And the third stock that we like is Tata Power. Now stock is enjoying its all-time high trajectory. The way stock has recovered in last couple of trading session, we expect that Tata Power can extend its rally, and possible target we could see towards 455 to 460. Keep your stop loss to buy this stock around 428.
Right. So Rajesh's three picks are Metropolis Health, MCX, and Tata Power. In fact, let me tell our viewers a little bit more that there is a brokerage note from Motilal Oswal on MCX where they've gone on to upgrade that stock to with a buy call and a new target price of 4,300 versus the 3,940 that it was earlier. They see the new products will be those key growth drivers for this counter, as well as the average daily trading volumes in the option segment, which has seen a good rise by about 60% in by FY25 is what they're anticipating. They're also seeing the analysis a yield of about 7% rise in the earnings per share for every 1,000 crore additional advantages in the option segment. So that is something that is going to keep this counter a buzz, we would say, and also among Rajesh Palviya's picks there. So you could be considering MCX if that is something on your radar. Let me quickly take the last word from Nikhil and what are his sectoral bets when it comes to how we are trending into these new highs and where we are seeing the benchmarks. In fact, 75,000 is what we crossed on the Sensex yesterday, 23,000 not looking too far away for the Nifty. So in this environment, what would be your strategy and what would be the sectors that you think are going to be pushing these benchmarks to these new psychological highs?
See, if you ask me, the direct beneficiaries are capital markets. Capital markets as a sector whole looks very good because as in when more and more participants are, coming to markets, the SIP flows are increasing. I mean, last time when I was on your show, that time, I mean, just 2 months back when I told that if the SIP flows will be reaching 20,000 and we are almost nearing that figures. So 20,000 SIP flows means 1,000 crores of buying daily, and the way demat accounts are being added every month on month, which I mean the capital markets are really going to do well. So Angel One is one of the stock which we like. Your BSE is something that we like. Even Motilal Oswal we like. Nuvama we like. So these are the sectors we like, and of course some of the decent chemical and pharma names where there is value buying where we see, and compared to market other areas, pharma and chemicals are much more cheaper and undervalued in terms of for going forward from here on. So that is where we like some names like Balaji Amines and Deepak Fertilizers, and these, since monsoon is going to be good, so I mean they are much more undervalued. And pharma also we like some names like Aurobindo Pharma doing well, Markson's doing well. So overall these are the names that we are really confident would do well.
Right, quite an interesting mix also there that Nikhil is suggesting at this point, but we're completely out of time. So let me thank both Nikhil Oswal as well as Rajesh Palviya for giving us their time this morning, helping our viewers with their queries and also giving us a strategy of how we should be trading at a time when we are close to kissing distance to all those new record level highs for at least the benchmarks, also the broader indices and what they are doing, the Bank Nifty, all of them looking quite positive on this trading session. We are going to be on a break tomorrow, but you can continue sending us your queries every day through the course of the show is what we'll try to answer them with our experts. But for now, it's a wrap and goodbye from all of us that put this show together. Thanks so much for watching in. Do keep posting us your feedback as well in the comment section below, that is on the bottom of your screens. And for all other updates, continue to watch Money Control.